Euro US dollar daily forecast July 18th, fxempire.com. The euro initially fell during the session as the Federal Reserve Chairman didn't explicitly come out and offer quantitative easing on Tuesday. This goes to show that many market participants were waiting for exactly that and they did not get it. However, during his testimony, he did state that there were further easing tools available, so perhaps this has given at least a little bit of hope to the market for stimulus. However, at this point in time, it's rather Pollyannish or foolish to think that the European Union has suddenly solved its problems because Bernanke may ease. With that being said, this is still a sell-only currency pair as far as we're concerned. Granted, we can see a break of the top of this candle probably pushes this pair up to 124, but the risk to reward just simply isn't there. At best, you're talking a one-to-one trade. Instead, we prefer to actually, if and assuming that the pair does pop, we prefer to let it rise and then look for weakness to sell between the 124 and 125 levels. It's at about 124 that we will start to see some type of resistance. Of course, 125 is a big round number. Weak candles in this area do interest us. Alternately, we could break down below the lows here, and that should send this pair down to 120. We actually prefer to see a pop so we can sell from higher levels. But this is all predicated, remember, on a bearish flag that had gotten broken down and was calling for 115. Seems a bit extreme for some people, but if you think about it, we dropped about 800 pips here just in the last couple months. So to think that we could drop another 700, and remember, time really doesn't come into play when you're talking about flags, say maybe by the end of the year or even the middle of next year, it really isn't a huge stretch. So we are still very bearish to the euro, and we look forward hopefully to get a pop here so we can sell from higher prices.